remember Bejal and I coming back from the first meeting with Fareed, Banu and you here in Bangalore. Literally the term we used was these guys were dripping with knowledge. Like founders who have that deep knowledge about their market are just special founders.
Being really passionate, I think that is what resonated the most. ShareChat was never competing with TikTok, so they had two products, TikTok and Hello. And Hello was what they cloned. Because they had so much transparency, teams were themselves motivated to reprioritize towards cost goals and still meet the P&L. When people in the company stop talking about dollar ARR and start talking monthly rupee numbers, is when we've really built a Dhandha culture. In times when you are going through a tough phase, I think it's your duty as a founder to share what you're doing, why you're doing.
And then came a very interesting M&A offer for over $1 billion. How did you think about that fork in the road and which fork to take? Hi, my name is Dev Khare, partner here at Lightspeed. We're in conversation with Ankush Sachdeva, founder and CEO of ShareChat. Welcome, Ankush.
Thank you, Dev, for having me.
We've been in touch and working together since 2016, since 2015 when we started chatting, but 2016 when we led the Series A in ShareChat. A lot has happened since then, in that period up and to the right. But I thought we could have a chat today around that journey and sort of the learnings that maybe founders can take away from that journey to sort of use in their startup. Let's just paint a picture of what 2015 was like in India and sort of what was the mobile sort of ecosystem in India at that time. How were people using the internet, what devices, etc. But let's just talk about some of the specifics. I remember my distinct memory is how everybody who had a phone had the data switched off because it was too expensive.
Yeah, the pre-Geo world was a different India. I think we all take data for granted now. Like when we started, a lot of our early insight was on the fact that data is so expensive. How do we make everything cheap? Like the first version of ShareChat was like a content app, but built with chat protocols, because the only thing that worked in India was WhatsApp. So we were like, we have to follow what WhatsApp does, which is like, if you find one packet of bandwidth in that 12-hour window, just get the content and show the user. And funnily, a lot of the users, of the early users, actually believed ShareChat works without internet, because we would like find that one packet where all other apps would be like on demand. You fire the app and then they load. We keep running in background. We just get one packet and load the content. So
when they opened it, there was something waiting.
Yes, because there was no guarantee that if you open the app at that time, you'll have good coverage, good bandwidth. So I think the entire product was built assuming data doesn't work.
I remember another thing at that time was the app size, because the phones themselves didn't have too much, memory. Yeah. And so you had to size the app to be easily downloadable, not costing too much of data to download, and then not taking up too much memory on the phone.
Exactly. And there was an entire industry to, like when you buy a new phone, there'll be like a person who will actually load the APKs and give it to you. Because one, you don't know how to install apps. Second, even if you know, you would look at like 10 MB app and just not do it because it's so expensive.
Yes.
And I think there were startups at that time who were trying to build these public Wi-Fi spots on railway stations. I think they also got funded. Because it was a huge business where people are trying to find free internet. So they were like, we'll give free internet and serve ads or something and make money. So everybody was trying to solve this data problem.
It was crazy. And I think in hindsight, and even some conversations at that time were about these products and technologies, whether it's the railway, sort of the box that helped you download things, were bridging technologies or enduring technologies. And sometimes we talk about that in our world where, things are a certain way, but are they going to be that way together to forever? And do you build something that lasts for that time when 4G isn't here or whatever isn't here, or do you build something that lasts forever, right? And a lot of these things were bridging technologies. I remember there was a browser company called UC Browser at that time, and which sort of conserved bandwidth. Yeah. Again, for the same reason, because bandwidth was too expensive. And it got really popular.
I think at UC you had Share It, Sender to share APKs over Bluetooth. I remember ShareChat before Geo. I think a quarter of our downloads were Bluetooth shared APKs. Like
Okay.
nobody talks about that today, but a quarter of our business or new installs were actually Bluetooth transferred APKs.
And then Android couldn't track that. So that was just shadow
Yeah,
usage
yeah.
that just happened.
Yeah, so Play Store metrics won't show it, but you are seeing traffic. So there was a big mismatch at that time. Yeah.
It's a different time, and it sort of makes me think how, anybody who's starting today, it's almost, you could predict what the world is going to look like 10 years from now, but it's likely going to be very different now with all this AI stuff. It's going to probably be wild in 10 years. But 10 years ago, it was also very different from what it is now. And I wonder, how did you think about, did you even think about that the world was going to change a lot, or you just built for that time? And then how did you adapt going forward? Like, how do you think about that as founders? I'm not looking for some big general strategy, but just in the moment, what did it feel like, and how did you think about this?
I think, you always want to be long-term index. So our long-term belief was that regional content consumption will be far larger when India is online.
Yeah.
We didn't imagine we'll have such great, cheap data so quickly. We knew that something was happening. Geo is like a term that was murmured around, that something will happen, but we didn't know this is going to be that big a change. Also, the reason we grew so quickly at that time was we built the product for a patchy 2G network. There was Facebook around, there was Twitter around, there was every social network still around, but they were not working. Only WhatsApp was working. So, in a way, you have to be balanced, where short term, if there are growth tactics, so we deployed this, for example, the patchy 2G app thing, right? It drove a lot of good organic word of mouth growth for us. And when Geo happened, obviously it was not so useful. We had to re-architect the app, get to a normal HTTP app. The media consumption changed, so we were heavily focused on text sharing. So all our viral loops that we built within the product, we assumed it's going to be a text going out to WhatsApp, so we have to put a link. And post Geo, the first thing that happened was it all became image focused. So we had to then embed our download messaging within image shares. The entire feed had to become about image. So we had to rank image content and not text content. So I think the world changed. One thing that remained constant was the appetite for regional content consumption in India was going one way, up to the right. Geo accelerated it. So that part was a constant part of our strategy, that we want to make sure that is we should be the most efficient, easiest way to consume regional content and share with your friends and family. The modalities changed from text to images to videos to short videos to now live streaming. So I think that has evolved. But people want regional content. I think that remained constant throughout.
How did you, in the early days, key into this big need that was out there? You would go out to cities and sometimes villages and spend a couple of weeks there. Just tell us about that and what sort of, how you architected that experience and what did you learn from it?
Yeah, I think we were very focused on understanding what is really happening. It started with understanding what's happening within WhatsApp groups, and we realized it's a different universe altogether. For every single topic or a community need, there was a group on WhatsApp, and people were sharing the phone numbers, and this is all happening in the backdrop of internet.org. And
the Mark Zuckerberg thing.
And the whole privacy thing was among the elites, everybody was saying data privacy and issues of that kind, while people in reality were sharing their phone numbers such that somebody could add them to a WhatsApp group. Imagine getting content, a joke in Hindi was so desired that people were putting their phone numbers out. So it was a different world when you actually observed it and not sort of read the elite media sort of narrative, right?
Right.
So I think it started with that. We got really curious. That led to us building ShareChat and I think we went through different iterations within that. So the first version was a chatbot, then a chat room, then the feed emerged sort of as the construct to serve content. And I think then we also felt that, again, we were in Mumbai, then moved to Bangalore. It still didn't feel like we were really getting the actual pulse, talking to people. So we should have some immersion trips, take our teams. I think I went to, there's a village called Bhaisli. So I visited that, I think it was 2016-ish time.
Right. Yeah.
And I think this was still pre-Geo, what I remember. And I saw people were doing this WLAN gaming. So they would all sit around a tree. The net was not fast enough or not cheap enough. And they would play these games connected with each other through Wi-Fi LAN.
Okay.
And so the reason we picked that was because from our data could see that this was a high penetration for ShareChat sort of market. And we could see that the morning ritual of a lot of people would be to wake up, find a good morning and from ShareChat and share to WhatsApp. And we could really see, and there were like few creators who would spend hours. So they would spend the night before 4 hours finding photos, like they'll click like a beautiful field in their village as a photo. Because they want to send that as a good morning tomorrow. So they'll take that, do the editing, put like a sun, put like Shubh Somvar or whatever, if there's festival, they'll put that. They'll spend hours, keep it ready. First thing in the morning, they'll put at 6. And I asked, why do you pick 6 a.m.? It's like 6 a.m. is zyada viral hota hai. Like we never coded the algo, somehow it is working like that, but users had figured at what time do you upload to get the most virality on ShareChat.
Okay.
So we realized, one, creators are putting a lot of effort. I think after that trip, we made a lot of changes. So when you post that, the first change we made was we put something called as a deduplication. So that original creators, when they put it, a lot of times people would just copy paste. So we made that deduplication work. We made sure that when you share content outside of ShareChat, we put creator's name on top of it so that they get some more validation. So I think those trips gave us a lot of insights which data could not. And that really led to a lot of creator side changes that we had to make on the app post that trip.
Oh.
A lot of these times, the immersion trips give you more than what data can show you. And
the funny thing that happened there is in the 2017, 2018 timeframe, once people had heard about these immersion trips that you were making, part of the pitches we would get would be, "Humne to immersion trip le liya hai," and it was kind of like a checkbox. But actually, there wasn't that much insight from many of those trips, so it was kind of interesting. It became like a thing to talk about. But maybe a flip side of sort of going into a market that's new, tier 2, tier 3 India. I don't know if it was a term then applied to internet sort of companies at that time.
I think there were a lot of terms. It was Bharat Tech, Varnak Tech. I used to hear these.
Right.
And I was like, oh, this is a term now.
There's a term now. We have to put a acronym on everything, right? But the flip side of sort of this new marketing opening up was that people didn't know about that market, whether it's the media or employees you wanted to potentially join you, or investors, for sure investors from outside India, but also the early sort of beginnings of investors in India. How did you go about explaining the market, but also the product, of course, but the market opportunity to all these constituencies in a way that convinced them in a market that didn't exist at that time? And this is, I'm trying to draw out the learning because every startup, many startups, not every, startup in markets that don't exist. And you have to explain it to other people and get them excited in whether it's investors or media or employees and so on. So in your case, just casting yourself back to that time, whether it was your first seed investor, your first article that came out in the Economic Times, or the first few employees that you didn't know from IIT Kanpur. Like, how did you convince them?
I think on the investor side, I think the most obvious thing that we could share was look at the existing media channels, print and TV. They're all regional. Look at internet, it's entirely English or 90% English.
Right.
And there's no world, like the bet was, will internet grow faster or will people's habit change faster? Because there was a rising English population, but which will grow faster? And to us, it was very obvious. I mean, it will be the technology, not people's habit of consuming. Like you would not imagine a world in 2030 where people are going more for Hollywood movies versus Bollywood movies, right?
Exactly.
So our bet was this is more sticky.
It's what we call an inevitable sort of outcome.
Yeah.
It's gonna happen. The speed
think,
at which it happens, you don't know, but yeah.
I think famously what Jeff Bezos says, right? Like, focus on things that don't change. These are things you can rest upon, that these will not change, and I can build my business around it. So I think these are a few things that we knew will happen. It's more about how and when it sort of pans out. But I think, so that was one larger picture. But then the other part was, okay, there are already social networks around. It's not like every country has its own Facebook. Facebook, it's a digital product, right? Run out of Silicon Valley, it sort of works that way. Why would you exist? I think there, honestly, the first 3 rounds was more about team and the insights we had. Because you didn't have like large numbers to show. Like a million DAO growing fast, but again, it's not game changing. So it was more, I think the team being really passionate. I remember we used to show these WhatsApp groups very passionately. I think even the pitch to Lightspeed, I think that is what resonated the most with on at least the investor side, that these people really are deep into what they're doing. They might succeed or fail, but they're if it's going to work out, it's going to be these people. So I
remember Bejal and I coming back from the first meeting with Farid, Bhanu and you here in Bangalore in, I think, late 2015, and we came back just saying, literally the term we used was these guys were dripping with knowledge about, this market that we had no idea about. And we're like founders who have that deep knowledge about their market are just special founders. Then the problems are, you uncover problems and angles on the market that nobody else can think about. So that's I remember that. I still remember the feeling. We're like, got to be in business with people who know so much and are so passionate about this market that they're in.
Yeah, I think I would agree. I think the two things probably was team and the fact that we were showing things about the market which not a lot of people knew. I think that worked in the initial phases. I think then obviously the growth came in, and I think then the numbers were sort of speaking for themselves.
Yeah. I remember there was a funding round every November for like 4 years in a row or something. It was like clockwork. But just moving on a little bit, I know the company grew and prospered in those years, 2016, 17, 18, 19. TikTok entered the market. And I remember those board meetings.
Yeah.
And the effect was gradual, but over time there was sort of
There used to be a split board, right? We had few folks like Xiaomi, who obviously had seen in the local market, so they were like obviously a bit more concerned than all of us, rest of us. But yeah, I think it turned out. I mean, ByteDance hands down was the best, the most the competitor you would want to improve yourself. I mean,
and even though you had a separate product, ShareChat,
yes,
which was very different from sort of short video.
ShareChat was never competing with TikTok. So they had two products, TikTok and Hello. And Hello was what they cloned. You do have a tendency to get complacent because sometimes things just like happen on their own.
Right.
But I think there's to be on the edge, cutting edge, you have to be like far more thoughtful, deterministic about like even the creator side, right? What kind of creators do I want? How do I incentivize it? How do I grow faster than the competition? So it can happen in vacuum on its own. I think a lot of the Western social networks just grew in vacuum because back in those days, nobody knew that this could be so large. But I think the Chinese evolved in a very different way. So I think they brought the Chinese playbook to India.
Which is what? How would you describe that?
Which is you run social network like a marketplace. Nothing is like network effects are there, but if you want to grow in this particular category of short videos, or short videos within this language cross genre, you have a strategy on marketing side on how do I attract creators. You have a strategy on the ranking side. Is your ranking algorithm even giving value or being fair to this kind of content format? So you have to be very, very conscious in shaping the marketplace in a certain direction, which I don't think we saw from any of the American sort of social networks.
Yeah, they had content operations. I remember at TikTok.
They had thousands of people in India. Like Meta, we never heard if they had even 100 people doing content ops in the country.
Yeah. And then, of course, the famous month arrived, June 2020.
Yeah.
The Indian government, in its wisdom, decided to ban many Chinese apps. And overnight, TikTok and Hello disappeared from the Play Store. So you remember the date? 6 p.m.
Me, Fred and Bhanu, we had rented the same flat. So we were in the same room just chit-chatting and we get a call that this is happening. And we just double-checked, because there was a lot of like media hype and rumors a month preceding that. So we're like, another rumor. Then they're like, no, this is happening for real. It'll be out in the news in half an hour. And we're like, wow, what do we do now? We were all anticipating this will happen, but it's happening right now. And I think within half an hour, the news came out. We started a new group within ShareChat, and we said we're going for it.
How was that decision made? Like, that's a pretty big decision.
Yeah, and imagine the backdrop was COVID had happened, lockdown was going on. That's Everybody was telling us, conserve your cash. We don't know when we'll come out of this. So we had gone through a very painful layoff before that. We've been cutting marketing spends, all kind of burn to just conserve cash. And this opportunity comes up. And we're like, okay, we'll park maybe like 30% of our remaining cash. But this is so big, we have to go for it. Like, even if we lose the 30%, this is no regret. So we formed that group internally. If you remember, 2 days after that, we had a board meeting.
Yes.
Where we shared the plan.
Yeah.
That we'll burn this much, but we'll grow this much, and then we'll see what happens after that. But yeah, the same day we had a group, we called it Project Gold Rush. We moved the entire growth team to just stop everything and build a short video app. And the target was 48 hours. We ended up building and putting it on Play Store in 30 hours from the ban time. That was crazy time. But yeah, we used to have this ritual of every day the entire company comes to Zoom. We have a DAO chart of ShareChat and the newly launched Moj, and like a patriotic song in the background. So everybody comes in, sees that, and then goes to the breakout room. So we used to have these breakout rooms within Zoom to have collaboration. We were trying different things for remote work. So yeah, that was a ritual every day that come in, and the DAO charts were growing. So we used to quote day-on-day growth. So I remember writing a few mails to investors saying we're growing. I used to quote day-on-day growth charts. I mean, things are so insane at that time.
I remember. And things grew very nicely on Moj, the short video app, as well as ShareChat, because Hello had also gone away. So those both. And then came a very interesting M&A offer that you got for over $1 billion, I remember at that time. Tell us a little bit about sort of how you as founders thought about, hey, maybe we should sell, or maybe we should just continue independently. I think this is a decision that founders increasingly have to take at all stages of a company. How did you think about that fork in the road and which fork to take?
Yeah, I mean, that was a...
And just to back up a little bit, this is 2020?
This is 2020 end, yeah.
Yeah, so this is maybe 5 years after you had started the company.
Yeah.
So it's still early in the journey of the company. $1 billion is not a small amount of money. So how did you, back to you.
Yeah, I think it was one of the many things happening at that time. So we had the Moj launch. We were burning at a crazy pace. So we had parked 30%, but very soon it was very clear that it's such a big opportunity. Everybody's jumping in, and we have to extend the budget we have. So we were bleeding through our nose. The product is growing. We as a product hadn't built for revenue till that time because we were chasing traffic. So imagine like the traffic is going so fast. We're depleting cash, and then M&A offer comes in. I think we were still in discussion to raise money because we knew that we had to, right? Otherwise, we'll just run out of cash. So I think it was, without taking names, it was a well-known social media company. A lot of us would be using it. And I think it was more than the amount. I think when we had those discussions, there was, I think, a very, very strong synergy, especially in terms of what we had to build. So when we were building ShareChat and Moj, and the reason we built Moj was, the most important part was building the feed ranking algorithm, because it was the hardest part, the most expensive part, and we knew this will be the deciding factor. And here was this company which has built it out already. We can plug it in very quickly, and we can actually shorten our path to whatever we could have built by at least 12 months. And in that time, if you're building a short video app with so much competition, I mean, that would have been a big difference in the terminal value. And I think there was a very, very strong sort of synergy that was coming our way. Plus, I think so our valuation before that was 700 million-ish, and this was an offer above north of $1 billion. Plus, I think for founders, some milestones.
Earnouts and all,
yeah. So for us, it was a huge sum, like a 3-digit $1 million outcome for each founder. So, I mean, I think that whole synergy part really pushed us to think that, okay, finally, the outcome is to build a great social media product. I think we can accelerate our journey from.
You could continue building, in fact, after that, if it happened.
And they had, I think, promised a $500 million commitment in capital to just keep building. So I mean, there was that also, and we didn't know we would raise $500 million on our own. But this company, like, very profitable or huge cash reserves and willing to put $500 million. So we thought this would make sense, and we sort of continued on that track. In parallel, we also had some commitment from existing investors, new investors, not a large, so it was a sort of still a lower valuation round that we had some visibility to. But yeah, I mean, running those two tracks, I mean, was
tension.
The most stressful I've been, because I mean, in M&As, one lesson is you don't assume it's done till it's done. Especially when the stakes are so high, you're talking about $1 billion sum, you have to operate with zero trust.
Back when $1 billion meant something.
Yes.
Nowadays, $100 billion might mean something.
Yeah.
Yeah.
So, I mean, you have to operate assuming anything can go wrong. Not because the intent is wrong on either party, but I mean, it's such a large sum. The world is so dynamic. You never know what will happen, right? So, we had to manage this fundraise. We had to manage this M&A. I think at some point we felt that I mean, there was a lot of push and pull that was happening on the M&A side, where we felt a bit uncomfortable, and it was sort of dragging, right? And we were like sort of depleting on our cash reserves.
Right.
And we're like, we have to make a call because it's not. I mean,
It's not
otherwise we end up with nothing, right? As a company, and I think that was a month. It was, I think, Jan or Feb, when we had again a huge burst of growth on the merge side. And luckily for us, we had new investors who came in and offered double the valuation. And then it was an easy call on the other side, right? I mean, we're getting a better valuation, either take it or leave it. I mean, we eventually, I think, chose the path of just raising, because now we had the ability to raise on our own and build it, right? So then why sort of take the other path? So I think we took that and went on with
the rest
with
is history. Yeah. All right. So, you decided to move on from that M&A offer, big round of financing in 2021, I'm guessing, right? And then we go through the early post-pandemic period. 2021 is, if you remember back, was a crazy year for financing. Everybody arrived in India. Everything was getting funded. All these categories, whether it was commerce or education, edtech or fintech, everything was social media, everything was getting funded. And then we reached March of 2022, when around that time, the interest rate hikes happened at the Fed in the US, and suddenly capital went back to the US in many cases. And sort of growth financing in the US, in India, declined dramatically. And sort of everybody had to start thinking about survival and cutting burn. Can you talk a little bit about sort of, not the mechanics of cutting burn and all that, because I think there's enough written about that out there, but more about how, as a management team, you got through that period? How did you think about communication with each other when things are not all about growth anymore and they're more about managing and optimizing and cutting and so on and so forth? How did you think about decisions? Was it easier to make decisions then? Was it harder? So on. Just tell us a little bit about the feeling of that time.
Yeah, I think there's a very sharp shift in the capital markets, the expectations from a company, especially a company of our kind, right, which is always focused on growth of user base and not built out monetization muscle like most social networks, right? So I think this is like mid 22 to late 22 where it really it hit us that, I mean, we have to shift gears and not like incrementally, like dramatically. We have to change how we think about our North Star as a company. Added to that, I think this was, again, Jan 23 or something. We had, I think my co-founders had sort of stepped out of executive roles. We had gone through a layoff, so there was massive negative media chatter all around us. And in all that madness, we have to, make sure that we deliver on that profitability chatter, right? So I think the most important thing for me and all of us running the management team was, how do we build trust internally? There's so much noise and everything outside. We need to make sure our folks, the best people, are intact. They know what we are doing. And the only way to do that was through transparency. To build trust through transparency, especially for that key, I think we had like top 50 people. We used to call them, we still call them ELT, the extended leadership team.
Okay.
We set up a forum that we'll meet every week. We'll have full transparency on the P&L of the company and where we want to head to. And we had non-negotiable P&L goals. Imagine a company that was only focused on DAOs to now saying P&L. I'm like, where's your revenue to even call P&L? Like, everything is lost, right? So we're like, okay, we'll have to build, we have near zero revenue. We have to grow to three-digit million revenue in next 2 or 3 years while cutting our burn like 95%. That is what it takes to build a profitable business from there. So I think that worked really well. The first few meetings were just a lot of shock that does not even seem possible. How will we sort of do it? But I think over time, as we saw some good wins, I think people started feeling a bit more confident. And I think it has a very interesting effect. So in some meetings where I would come and say that, guys, we are most likely missing the monthly goal, I would see post that meeting there's a sort of a electrifying energy in the whole office, where people are now thinking, what do we do? And there were a lot of bottoms up ideas. Like a lot of the goodness we got from the cost cutting was from the engineering side on server cost. So I would see like teams just going deep into the code and figuring that if we do this feature aggregation differently, we'll save 50 lakhs. It's not prioritized, it's not in OKRs, but to hell with the OKRs, we want to save money, just go and execute. So I would see people overnight sort of change priorities towards cost cutting and make it happen. So there were like several months where midway, all of us thought we'll miss it, but we ended up actually meeting it. And this was all bottoms up, real energy coming to solve it. It was like, I think half of it was probably top down, but what was really encouraging to see was because you had so much transparency, teams were themselves motivated to reprioritize towards cost goals and still meet the P&L. And I think one interesting observation I had was when people in the company stop talking about dollar ARR and start talking monthly rupee numbers, is when you've really built a Dhandha culture. So I think now it's a good optimal mix of, like, we used to be a Silicon Valley type product company, right? That sort of culture. Now I think it's a good mix. Like half of it is still Silicon Valley product, the half is Indian Dhandha culture. So you're really mindful of your monthly P&L, but you still have your eyes on how do I build the best feed ranker to drive my engagement through AI. So you have a good mix of both.
Interesting. Yeah.
But I think that was a big shift in
so
how
transparency.
we operate. Building trust through transparency.
Building trust. No, that's a great lesson. Just sort of, you got to give to get, you got to share to get back even more.
Yeah.
Versus keeping, information close to your chest and not revealing much. I think revealing sometimes helps people buy into
I think we incorporated one more thing. So even that still continues till now. In our monthly town halls, which is with the entire org, I actually show operational profit, the chart, and people just love that. They're waiting for that. And I think the most common concern for the people during so much noise is, are layoffs going to happen? What will happen to our jobs? And that's a big concern. I think that is the best way to sort of tell them that we're on the right path of actually hitting our goals. So let's keep working hard. And then we don't have to worry about other things.
Shifting to a couple of more softer topics, maybe softer, maybe you think they aren't. Let's see. Relationships with your capital providers along the way, all the way from India Quotient was the first investor, and Elevation and Lightspeed, and then others came after that. I mean, on a personal note, between you and I over the years, there's been good times and bad times. Times when we are communicating a lot, times when we're communicating less. It's also a journey in a relationship in a sense. And you can think of all the relationships people have in their lives with their parents, with their siblings, with their spouses, with friends. All relationships go through flux over time, right? Can you talk a little bit, again, in terms of learnings for founders out there? What are some, maybe one or two things to manage relationships with investors? And maybe for the investors out there, what are one or two things that they can do better to manage relationships with the founders that they work with?
I think we've had our own ups and downs between I think the founders and the investors. But I think over time we've also sort of understood how to be sort of better as a management team. I think especially during tough times, right? Like the whole media chatter affects all of us. I think I just shared an example of how it affected the people inside, right? But now we have such a large cap table. There are a few investors whom I would probably talk once in 6 months. And the rest of the time they're just getting fed the media narrative. So I think it's sort of, in times when you are going through a tough phase, I think it's your duty as a founder to sort of share what you're doing, why you're doing. I think sometimes in good times you sort of get into a habit where things are just up on the right, investors are obviously happy seeing the growth. I think it's really in the tough times that you have to manage that part of the communication. And more than the other times, make sure that everybody is bought into the problem solving. And founders might be wrong in that time, because a lot of the decisions are based as external signals, right? What's happening in the world, in capital markets, and some people in your capital are probably much more clued in to that, and they can give you what perspective on what's happening in other parts of the portfolio. I think we get a lot of good information on what's happening, let's say on the people efficiency side, that we are bloated. I mean, you have to cut it down. So I think it really helps to have that collaboration, especially in the toughest part. And I think we've really benefited from that sort of collaboration. I think on the other side, what I think the other part of the question, right? What investors should do.
What could investors do better? Yeah.
I think.
I'll try not to take it personally.
Yeah. I think every startup goes through ups and downs. I think it's usually when you're down, when your back is against the wall. I think you want an investor who can bear good bad news and just talk to you
and stay calm.
I mean, the worst thing you can do is when the founder is going through a tough patch, you read a media article about competition, call them up and say your competition is doing that. I'm like, I know that already.
Yeah.
I mean, that's not helpful, and that triggers the founder. So I think the best relationships are formed in the bad times. Is when really you are yourself, like every party is themselves, right? Because
you just have to be
the
real.
stakes are so high to be so real, and all VCs who say founders are like they're founder friendly, it's the bad times when it really shows up, right? And you should not be founder friendly when the founder is wrong. You should actually tell them your team is bloated, your product doesn't work, cut your burn or you're dead. I mean, you need somebody to say that, and that's still founder friendly. But the way you do it, I think that makes all the difference.
I can personally say in this journey since 2015 or 2016 to now, I've evolved through interactions with you and getting feedback from you. So it's as much a journey of investor evolution as it is of founder evolution, which actually brings me to my last question on founder evolution. I'm not going to ask you sort of what your advice would be to your younger self, because I think that's a typical question. But can you talk about sort of whether it's yourself or other folks who came out of IIT Kanpur to start other companies or other folks in the Bangalore or general startup ecosystem, what is the evolution that founders go through from being a first-time founder, which you were, to now 10 years later, having gone through everything and thinking about growing the company even further? What are the things that founders evolve on? What dimensions?
I think a growing business forces you to evolve. So, I mean, even if you're not proactive about it, you just have to do it to grow the business. I think one thing you probably start realizing more is the value of having great people around you. I think because most founders are sort of self-believing, hands-on, want to get stuff done, especially the first-time founders. I think we really realized during the journey that a few great people can actually change trajectory of the company. If you get few key people in your management, in some important part, right? So I think that probably first-time founders are a bit under-indexed on. And it's a very conscious effort, right, to land the right person. So I think that's one part that you evolve definitely when you're sort of starting out versus 10 years into building it.
I'll leave it at that, but really thank you for being open about the journey, the ups and downs. I think there's a lot to learn for founders and investors.
No, thank you for having me. This was fun.